so they can play games and make crypto money.
Ready?
Let's roll.
Welcome back, Mortgage Daddies. We got a special guest today, our own personal and business CPA, Stephanie Drum.
Hi, everybody.
Welcome, Miss Stephanie.
The most nervous guest we've had.
Oh, 100%. She's
Am
like,
I?
does my hair look good? Is it sticking out? I didn't prepare
No,
for
everyone's
this.
going to be looking at it the whole time.
It's fine.
Just sweating a little.
I love it. So, Stephanie, obviously you've been my accountant for probably 5 years now since we started the company, business, personal. You do everything. I refer you to every single person I know. I know you just went to a conference out in California
Yep.
on crypto.
Yep.
After the news of Trump getting into office, I was able to look at my Coinbase, and I only dabble in it. It's all in the red over the last couple of years since I even bought some. But tell us a little bit of stuff that you learned out there about the crypto markets.
So crypto's not going anywhere. And what people really like about crypto is it's open all day long, 365 days a year. And there is, think of it back in the day, you bought a share of IBM or a share of Apple. You could see it, where crypto is a bunch of coins kind of in the air that are all different prices, different levels, meanings. So there's a lot more things to research or what you want to try to get a hold of. The big challenge for everybody is you're going to have to monitor what you're buying and selling and what would be taxable. And there are a few tax softwares now out there that will do that for you. So you can move your wallets into the software so it can generate a report for your accountants or CPAs to see where you are sitting. So for example, over the summer, I had a client that called me and said, Stephanie, real quick, I have a question for you. I'm like, okay. He said, you won't believe this, but I have 800,000 I just won gambling in crypto. I'm like, what do you mean? He's like, I don't know. I threw $50 into crypto. I pretended I was someone overseas because I don't know if you can do it in the US. And they $50, and then he won 800,000, and it was real. So he's like, what do I do?
Is it like a crypto lottery?
Yeah, it's gambling.
What?
Crypto gambling. It is a real thing.
Well, we're
We
doing
need to do
after this.
something else.
It is a real thing. You should just try it a little. Really? What do you have to lose,
Anybody
right?
who's watching this right now should just start crypto daddies out there and start gambling and winning $800,000. That's insane.
So if he leaves the 800,000 right where it is, it's okay. But of course, you want to get it into U.S. funds, right? So what he did is, we'll see how it goes. He converted 400,000 to the U.S. into his bank account, so him and his wife had access to that money. So that, of course, will be a gain. And then he left 400,000 just to invest in crypto. So I can't wait to see. And he did say, he was like, I don't think I put my Social Security number on anything. But the thing is, you're a U.S. citizen, so all your taxable transactions are truly taxable income. And I don't know if you guys have noticed when you review your individual returns, there is a box that says, have you invested, are you exchanging crypto? So the IRS is trying to crack down, and all this is on the blockchain. So think about the blockchain being the big mothership of all the banks, right? That's kind of they're holding all this stuff. So it's out there. So that's why it's important for us to tell people, track what you're doing. And I have one for you. You're going to love this. You might get a Christmas present. I think a lot of parents are going to get a Christmas present this year. A lot of the kids, teenagers, are making crypto money gaming. So they can play games and make crypto money. And then these kids are probably going to get a crypto statement saying that because it's earned income that they're making from their gaming.
I really hope Fortnite pays
So that's
income, because
thinking.
Fortnite probably cost me $150 a month minimum.
But this is fascinating. On the flip side, your kid could have a business happening, right? So they've earned income, they're making crypto, and then they could be putting money into a Roth or education fund, whatever have you. They could probably take business deductions against that, right? The new
I should
game they
stop
bought.
yelling at my kid to stop playing
But
PlayStation.
I think
blocks.
when I did hear about this, I do want to tell my clients we should be paying attention to, are they? Yeah, because every kid will be like, oh, I can make money gaming. But then you got crypto happening.
That's wild.
Is that not wild?
How far back do you think the IRS is going to be able to look at people like that, right? The crypto's been around for a decent amount of time now with no real regulation. Like everybody just thinks that I'm going to invest in crypto, into blockchain or whatever.
Yes.
It goes up 30%. Then they take the money out. How's the IRS tracking any of those dollars?
I think that they're trying to get reports and data out of the blockchain so that they can, and then I think what they're doing is they're monitoring people's tax returns in that checkbox. There's a reason why that box is there, and they want to see who's doing it, who's not. And there's new forms coming out this year. So if you sell investments, we have to report that on a special form on your tax return. Now there's going to be one just for crypto.
I just don't know how they would track that. Like that's always been like one of the nuances of like the whole crypto idea is like no one can track me. Like I have clients, like I have $300,000 in Bitcoin. I'm like great, like where is it? Like I can't get the statements, and I'm going to use that for a down payment. And then us trying to source it coming into like their banking system in the U.S. It's just wild to me. How do you think the IRS is even capable of doing that and tracking that at this point, or is this something like they go 5 years and then somebody's going to get a tax bill for
probably because you didn't report it, right? So it'd be kind of like fraud, right? So they can go back as far as they want to.
What's the percentage you pay on something like that on taxable income for crypto? Is it any different? Short term, long term?
Yep. No. So some of it is capital gain. So that would be at like 20% IRS, 5% for us in Massachusetts. And then for the gamers earning that, it would be at their ordinary tax rates.
Interesting.
And I have a few clients that are actually with their crypto loaning out money. So kind of like, right, hard money type things. So they're earning, we'll call it interest in the crypto world. So that would be at their ordinary rate because it's interest.
And you've already started seeing like real estate investors selling their properties and going into the crypto game as an investment vehicle as opposed to just staying in their real estate because of the appreciation and the upside of crypto.
Correct. They just feel, some of them feel like this is, just in its infancy. So it's just going to grow and get better. So they just look at what they own for their rental properties, and a few of them have sold and, put a good percentage of that in crypto.
It's amazing.
In
Do you have any
investing.
people buying with crypto properties? Like if I want to buy Vern's house.
Not yet, but I really think one day crypto is going to be another form of payment.
I almost see crypto taking over, like maybe not in my lifetime, but just taking over. Like I look at how my kids interact and their technology. Crypto just taking over the U.S. dollar and just kind of eliminating that just because it's so much easier, right?
Right. Other countries use it.
Yeah.
Yeah. And I think I told you when my oldest went to college, he had asked me and my husband if we had a crypto account. And we were wondering, why did he ask us that question? And it was so he could get his fake ID. That's how you can get a fake ID now in crypto. Back when we went to college, you just needed $20.
Wow. Crypto fake.
So did you have a fake ID?
Your kids are watching. They want to know, did mom have a fake ID?
My husband has a crypto account, so
So he had
we
the
were
fake
able
ID.
to, yeah.
He's got a fake ID. So your son's going around buying all the booze for all the freshmen and sophomores in the school.
No,
Where did
It's
your son
okay.
go to college?
Wentworth.
Oh, nice.
Yeah, yep. Computers.
So he can learn how to make more money on crypto.
He's probably doing mining as we talk.
Whole farm system going on.
The whole school just running underneath them.
Jeez.
So you have two kids?
Two kids.
Boys?
Yep. So one's 19. That's Matt. He's in college. Jake is 17, and he's a senior in high school.
Awesome.
What's he want to do?
I think he wants to go into the Army or Navy. Yeah.
Oh, that's awesome.
Yeah. Yeah.
You have your hands full. So I know you recently merged or acquired another
Yeah.
CPA firm.
Yep. With Doug Rodrigues. So Rodrigues and Drummond Company.
Yep.
And-
Just
And I've known Doug for a lot of years, and he does, which is great, peer reviews for other CPA firms. So we do a lot of what you would kind of do. It's kind of like an audit of another CPA firm in their financials. So I'm really happy to have him.
On board.
Yeah, absolutely.
Yeah, I was just picking up the skis for my kids over at Bobsey and Ski. And there I see the big Stephanie Drum sign with Rodrigues over there. You guys have a nice little office space right there in front
Yeah.
of
Oh,
it.
do you
Yeah.
guys?
Yes.
Congratulations.
Yeah. Thank
Is
you.
that where his office was?
Yes.
Nice.
Yeah. Yeah. Yeah.
So you're growing at a rapid pace. How many CPAs do you have underneath you now?
We probably it's less than 10, and we're definitely looking for more CPAs. Especially nowadays, you have to be. Our firm is full service, so you have to have tax people, accountants, auditors. So,
Can you
um,
kind of like explain what the difference is? Because we get questions all the time
oh
from
yeah,
people, who are either buying properties, it's their first property, or they've bought a few now. They're starting to have different LLCs, maybe they have another business, and they've either been doing their taxes themselves or they had some TurboTax or whoever
yeah,
doing it, but they're not really getting that full benefit, that I feel like we get having
yep.
you on our side and what we can run by you. What is the difference between a CPA, a regular accountant, or also just like what you guys do versus, if somebody just calls TurboTax?
Got it. Okay. So generally with a CPA, we have more schooling, a higher level of tests that you have to take. And then we have to keep up our studies each year as well. And even to perform certain audits, CPA audits, you have to do studies within that every year. So we're constantly learning and growing and that sort of thing. And I think being a CPA sometimes, especially in public accounting, you have that hat that you're working with so many different clients and industries. So we just, I guess, have a wealth of knowledge because of all the people that we're working with. And we got into this because we like to help people. So we try to share and help them as much as they can. Where I think sometimes if somebody is maybe an enrolled agent, maybe their background is just tax. So they can't help you maybe with accounting questions or CFO type questions, that type of thing.
I think one of the big things is just tax planning.
Yes, tax planning's
call
huge.
Stephanie and
Yep.
I'm like, tax planning is huge because I'll talk to her in August and say,
Yep.
Stephanie, should we buy a vehicle in the company's name? Should we do this? And I think a lot of businesses leave a lot of deductions
Yes.
or credits
Yep.
outstanding that they just don't have that conversation with their accountants and their CPAs. What are some of the biggest tax deductions or credits that you see a lot of people miss when you review them and you're taking them on as a new client? So you're reviewing the last 2 or 3 years tax returns.
So sometimes, we see clients that really, it's hard because sometimes you look at your CPA and sometimes don't see the value there because we can't come in and fix like an electrician can or a plumber, right? We're just, we're kind of, sometimes you may think of us as just reviewing papers and giving you ideas. So I think the biggest thing we see is some clients say, we don't want to pay for that during the year, but then they'll get mad when they owe taxes or it's a surprise. Exactly. So this time of year, we're busier than ever because we're pre-doing everybody's tax returns because I want to have the conversations now and tell you this is what it looks like. So you have time to work with us. We can strategize or think. But I think to answer your question is just people, they're running their businesses, so they're not stopping to think, what does my profit and loss really look like? And what does that mean tax-wise? In giving the CPA time to have the conversation with the business owner. Retirement plans are great because then you're putting money away for yourself and you're getting a tax deduction as well as helping your employees out as well. So I see some businesses might be doing a smaller type retirement plan where they could step it up and even do it more. Again, if they're watching their profit and losses, these are the times to have the calls with your CPA and financial advisors.
And how often do you think Craig and I call you, like in a month? Like, how often does one of us call you?
He calls more than I do.
I call all the time. For anybody that's out there, if I have a question about anything to do with my
And I
accounting or
love it.
anything, I'm
Yeah,
like,
I love it.
can I do this?
Yeah.
She's usually like, No. And I'm like, all right,
I
well, what happens if I do?
I like when I like it when you come right out there and you're like, I saw this on a YouTube video. I just
TikTok
want to
idea.
ask.
It's like, hey, if I set up this random LLC in Montana, do I have to pay taxes ever again? She's like, yes. And I'm like, damn it, TikTok. Gone, next up.
Yeah, so I love it, but that's why I think we have a great connection because that's what excites me, and I think sometimes I think that's what makes me a little bit as a different CPA is that I just thrive to help my clients in any way that I can. I ask a lot of questions, and even if I don't hear from them, I'm going to call them or pop by their business and say hello because I want to be in front of them. I don't like surprises, so I don't want any of my clients to have surprises.
I think just the personal relationship that you bring to the business makes Craig and I feel more
Comfortable.
right?
Yeah.
So we're not scared to ask you, is this a good idea for us to do this? Or what do you think about that? I think you staying in touch with us, at least, if we're talking to the general public, I think you probably talk to every one of your clients quarterly or
Yep.
somebody in your firm.
Well, yep.
And we're just special. We have questions every single day. But I think that's one of the big things that separates you from the other accountants I've used in my life, where I was almost scared to call them. You
Right.
know what I mean?
Yep.
Like, I already know I'm going to get a bill and I have no idea what it is. And it's a 2-second
Didn't even
question.
ask my question yet.
Didn't even ask. And I'm like, all right, I'm already getting a bill in the mail. But I almost feel like it's almost like, they say that no question is a dumb question.
It's so true.
With you, it's really not.
No,
Like sometimes-
because it could lead to something else you're doing or trying to think about where I can help you save taxes too,
And get to
as
the bigger
well.
picture, right?
Exactly.
So
Yeah.
I think that's one of the big things
Yep.
that I really enjoy working
Yep.
with you on and your entire firm. It's been a game changer.
The planning side of it, I think, is important, especially maybe even if you don't own a business.
Yeah,
You
of
just own a
course.
couple of properties, or you want to buy another
Yep.
property and you have one. So many times we come across this on our side. We did a loan for somebody. They bought their first house. It's easy. You can use the rents on the property.
Mhm.
Well, now you've owned the house. You've
Mhm.
owned it for a year. You've owned it for 2 years. And now we're at the point where you want to go buy another house. But you might not make enough income to offset a whole nother mortgage. So now what you show in your taxes is very important. And I have this conversation, I feel like,
Yes.
over and over and over to people because I'll let them know that ahead of time. And I'll try to get their wheels spinning a little bit to
Mhm.
think, okay, I can't just go and write off everything under the sun on this profit and loss on my property if I want to buy another house.
Correct.
Then what happens is they go to their tax person.
Yep.
I'm not even going to say accountant. I don't even know who some of these people are. And they come back and they don't listen to me, or they didn't send them to me to check them. And now we have a huge loss on the property.
Yep.
And even though they're getting $1,500 or $2,000 or $2,500 a month in rent, what they can qualify for is nothing because it's at such a huge loss and there was no planning.
Mhm.
So many tax people, or when people go to do their taxes, it's like their number one goal is, I'm going to save you money on your taxes.
Right.
Well, great. But if that doesn't fit into what my plan is and what I want to
Correct.
do, you're really not helping me. You're hurting me because now I can't go do this. And now I have to either put more money down, pull money out of another property or do something different.
Absolutely.
And people don't think about that. And nobody really ever, goes around. I feel like I talk about it all the time. I know he does.
Yeah,
And I know
absolutely.
we talk
Yeah,
about that.
it's
with
big.
my plans on what I wanna
Absolutely.
do.
Yep.
But nobody ever does that. And that's where the planning side, like if you're listening to this and that's your goal, planning with an accountant to make sure that you're going to be in to have like a team. I mean,
A
we always talk
team.
about
It is
this,
a true
'cause
team. Yep.
Your accountant might say, hey, this is enough, but not realize really what you need to qualify. So you need that mortgage person that's involved in that conversation as well. So we talk as a team to figure out, okay, this is what you need to show. You can't write off every single thing that you want to because now that property is at a huge loss and you can't offset that with your income. And that's where the planning side, in my opinion, is huge versus you just, before I ever met you and I
Yes.
even got involved in this,
Yeah.
here's my paperwork, drop it off. 2 weeks later, they call you back, pick it up, and you sign. You have no idea what's
What
happening.
it says.
You don't know anything. You don't even know the questions to ask.
Mm-hmm. Yeah. It's a good point. Really good point. And
Right.
it's really big picture. And that's why I always, if a client's trying to look to save taxes or have an angle, it's why I'm asking a lot of other questions because
Yeah, what's your next like 3-4
right,
steps,
because this is what everybody's going to be looking at. And if you don't have income to show, someone's not going to want to buy your business or they're not going to want to help finance you.
We see it a lot too, where somebody owns 2 or 3 properties and then they go and they sell, a property they bought for $200,000. they're selling for 600,000, and they have no understanding of capital gains
Right.
or a possible 1031 exchange, or all things. They don't even have the conversation with Craig, myself,
No.
their loan officer, their accountant. And then at the end of the year, the accountant says, "What'd you do with the property at 123 Main Street?" "Oh, I sold it. I made 400,000." He's like, "Uncle Sam's knocking on the door for 100 of that," right? Like,
Correct. Yeah.
it's anything to do financially. Pick up the phone and call your accountant. Like,
Right,
it doesn't
yeah.
matter what the
all
cost
the
is.
time calling me and asking me. I'm like, you need to talk to
Do
your
you
accountant.
need
Like,
to talk?
I can't tell you what type of gains you're going to have to pay or how you can avoid it. But I mean, in like, you don't need to dive into this so deep, but just like a brief overview, because this question we get a lot. Investors want to sell a property, buy another property with a 1031 tax exchange. What is like kind of like the basics of what amount of that profit you have to roll in, and what amount could you possibly keep to not have to roll into that?
So it's kind of with the 1031. Think about it this way: you're really deferring your gain, rolling it into another property. So it's like you're just keep. There's some people that keep doing 1031s because they're just rolling that gain. Because once that gain hits
Eventually, you're
you,
gonna have to pay it.
yeah, or your estate will,
you're
or
gonna-
whatever have you. So it's really
Do you
a
think
deferral.
it's like the best idea? Because I mean, in my eyes, if taxes are like anything, they always are
go up.
going to go up. So if I'm going to pay, I'm just going to use an example, 20% now, but I want to roll this into properties, and at some point, I know I don't want to hold all these properties forever. I want to offload them. Well, why would I not want to pay the tax now
Because you have
at 20
right.
versus risking what it might be in 20 years, where it might be 25, 30, 35%. I mean, that's the side of it that I don't think a lot of people look at, because they're just like, well, I'm going to save the money now. Yeah, well, are you going to keep holding properties forever and ever and ever? Or are you going to eventually sell them? Because if you're going to sell them, I know, like when I talk to my financial planner and you know, it's, well, what am I going to pay now? What's my tax bracket? Okay, you know, maybe it makes sense at a certain age. You know, you stop working, your taxable income's less, you're not paying as much at a certain point. But that's a big piece of it as well, right?
It absolutely is. And I want to say, when that does come up, usually I'm on the phone with the client, the 1031 exchange expert, and maybe even the real estate attorney, because it's a strategical thought process, and it's your money, your life. So you want to make the best decision. And that's why, again, having a team is so important.
Is there a piece of it that you say, I bought a house for 400,000. I put money down, I did repairs to it. I spent $100,000 down in the house, and I put $100,000 into the house. 2 years later, I sell it and I buy another house. Off of what I bought it for, I'm selling it for $6,000. So there's a $200,000 profit there.
Okay.
But I put $100,000 down and I put $100,000 into it. How much of that 1031 has to go in? Is it the full 300?
The full gain.
So off of, I could take it back out the money that I put down on the house,
right.
and then anything on the repairs.
Right. Yep, that's part of like your basis
So you
in
have
it.
to figure that out.
Yes. Yep. And that takes work
And
to
most
do.
people who are not accountants or potentially even financial planners have no idea.
Even miss
why I
thinking
brought this
about a
up is,
1031.
Well, one, you know what we're
Yeah,
trying to do on
of
my
course.
side with everything.
Yeah.
But also, I have a client right now that's looking to buy another house and do a 1031 exchange. And I told her, I said, you need to go talk to your accountant. You need to talk to 1031.
Absolutely.
So she just texted me before we got on this podcast and said, my 1031, the person I talked to said I need to put all of it. I'm like, what does all of it mean?
Yeah.
Because you also need to keep some money for reserves if you want to buy this, and you don't have the funds to be able to cover that. So you really need to figure out if there's some of this
all
money
the aspects
you can actually hold back, because if there is none, well, now we can't
that whole
do the
gain
1031.
right is going in there. Because think about it, the numbers have to work, and you have to keep it in the 1031 because you're deferring that gain.
Interesting.
That's why you're doing that.
I've been doing this for 20 years. I did a 1031. They told me I had to put everything into it, and I didn't even question it.
Well,
I
and it
feel
was
like
the
that's what
gain.
always
Yeah.
happens,
Yeah.
from what
The
I see,
gain.
but I'm like,
No, I put every dollar.
You have to
So, like, the
really
payoff
break
on the
it
property.
down, and look at all the numbers. And that's
I
why
think that's the
you're
easy
able
answer that somebody
to,
can give you, because that's like you're fully protected at this point.
you're
right?
fully protected in your whole gain. Everything is being deferred. But that's when you really just got to look at the whole numbers and really see what the true gain is, what needs to be deferred. How does everything work out?
Because if it's me and I put in 100,000, put in 100,000 into repairs, and I'm making 200, I don't want to roll in 4. I want to take, if I can take non-taxable income out of that at 2 and put 2 in it, now I have 2 more that I can play with to go, do something else or renovate the next property or do something like that. So if somebody just told me, no, you need to put in all four, oh, great, awesome.
Just pay the tax.
Now I got another property and I'm not really ahead.
And you should only be paying the tax on the 200 that was actually the gain minus
Yeah,
the rehab.
that's what I think. But
Yeah.
90% of the time, the ones that I've always seen, it's like, this is the
full.
net that you're walking away with, and that's the exact amount that's going into that 1031
Yes,
tax
yeah,
exchange.
but they probably don't go through the numbers
Nobody
where they
does.
should
They
be,
definitely
so that you can understand.
I haven't been a part of a ton of them.
But you're right.
Because a lot of times that's more on the investment side, and some of those investors are, using either hard money loans
Yeah.
or they have some commercial lenders that they're partnered with, and they do have 15, 20 loans with them. But it comes up every once in a while. But I get questions more on it than it actually ever comes to be. But I think it's going to start coming to be more now as people who have bought these houses, even if it was just one or two, then they bought their single family over the last year or so. So now they have that one. And now they're like, oh, I want to take it and go buy, something bigger or something better or whatever it is. So I think now it's going to, for me at least, because of the length of time that I've been in this business, like my clients from 5.5 years ago to now, maybe bought a multi, maybe bought another multi, then bought a single. Now they're looking to turn back over those multis into bigger projects or nicer multis too. It's interesting.
Well, that leads us right into our next segment, which is what is the new U.S. Treasury financial enforcement reporting?
Oh,
That sounds
okay.
like it's a-
Rolls right off the tongue.
Yeah, I'm looking up. Definitely read that off the card here.
I was waiting for you to read that one.
I was like, "Man, they did such a nice job with like the crayon that they wrote this in." I'm like,
Yeah,
I'm not even
really
really
rubs
sure.
right off.
Yeah, I'm like, they touched it 3 times. Financial was basically did not look like that, but tell us about anything with enforcement reporting.
Yes, yeah.
We'd like to know about.
Yeah, so that's new through the U.S. Treasury Financial Crimes Unit. Anybody that has a business that's registered within a Secretary of the State, you need to disclose by January 1st, 2025, the company and who the owners are. And there are some exemptions to what companies need to do it, but it is something everybody has to be aware of, because if you are required to and you don't disclose, the penalties are big. And basically what they want, it's for money laundering, international affairs, things like that. So a lot of the people that are out there nowadays with their side gigs and creating all these new LLCs aren't aware of this filing requirement. And if it's new, you have like 30 or 60 days to just jump on the U.S. Treasury and do that filing. So
for every LLC you have,
every LLC you have.
this is more geared towards real estate. So
Yeah.
if I have a client that has 6 different LLCs because he puts every house he
Yep,
has in
and
a
they're
different
registered,
LLC,
right?
every
Secretary of the
single one has
State.
to be done.
Yes.
Is there a cost to do that?
Free.
Free. Oh, something.
And all it is to just
Just
disclose
disclose the owners,
And
the
look at it,
business.
like on a year, because it would change. You could change. Like I could start an LLC and then I could give half to Vern.
Right.
Now he's an owner of that.
And then you would have like 30 days to update kind of what's happening.
So they would know like when you originally started it, but then if you changed it,
Yeah.
there was no
There's no
tracking
changes.
before.
Yeah.
Got it.
The initial
Yeah.
year, and then if there's any changes.
Interesting.
Yeah.
Things to always do.
That's why you need to have Stephanie.
Thank
Drummond.
It's a
God.
big
She's already
thing.
emailed me like 3 times, so I'm gonna have to do that.
I know. Sometimes I skip over you and go to Kevin.
Yeah, Kevin's probably the best contact.
And
Keep going,
sometimes I
Kevin.
skip over you and go to Rachel or Wendy.
Check. Perfect. That's exactly how we want it.
I like so many words. I don't know what
Too many words. Too many words.
I already asked Kevin, I'm like, can you come and do this for me? Because I don't know how to do it.
No, I mean, I think that's why I call you.
Yep.
Is it easier for me to look it up?
Right.
But then I'm not going to understand it, right? Like if I looked up,
You want the
enforcement
cliff
of
note.
that, like, can I just tell me I have to go add somebody to an LLC, right? Like
Y-
that would scare me enough where I'm like, we need to contact attorneys. I'm super scared, and it breaks down. All you have to do is
Yep.
add and update the LLC.
Yeah. Yep.
Makes sense.
Yep. And believe it or not, upload a copy of your driver's license or passport,
Jeez.
which
That's
is
fine.
interesting.
Probably just verifying addresses, mailing addresses.
No hiding
names.
anymore.
Yeah.
No hiding out there.
Do you see now Trump got elected? By the time this airs, that should definitely be like 100% positive. Do you see any changes coming that will affect anybody come next year? that anybody should start to try to plan for?
I think that there could possibly be more credits out there that might be coming. So, I think everybody just kind of like watch what does come about. But I think there's going to be changes and possibly even retro changes as well. So, what that means is we could be in January already drafting tax returns. They might want to push something back. So, yeah,
Excellent.
I think there'll be more credits to come
That'd be
to help us. Yeah. Yeah. Energy efficient credits are still really big.
Mm-hmm.
Windows, doors, insulation. I think you're going to see more with the cars.
Oh yeah, the electric cars.
Yeah.
His good friend Elon might have something to say about that too. So
I think that's gonna help.
I
So,
don't know.
Talking that he's gonna be the trillionaire by 2027. Must be nice.
We're on our way. Mortgage Daddies is not stopping. We're soon to be on Spotify. We're finally going to become like a real podcast after this. I think Stephanie Drum is going to be the first one that hits Spotify. So we have a lot to learn from this.
yes. And then I think, and I would be happy to do like just a crypto one. Tax wise, because I just think it's big and people need to know. Like a lot of people think, oh, I'm doing it, but I don't need to report it, or it's my
There's
hidden
always,
money.
like, a lot of, like,
There's
I
just,
say misinformation,
Yeah.
but not like the full picture and everything. I mean, with mortgages, everything's different. Like you apply for a loan,
Yeah.
it's going to be different. And I'm sure tax wise, it's the same thing. So
Mhm.
trying to listen to what somebody says on TikTok about, what you should do for your taxes might not necessarily be the best idea or plan
correct.
for you.
That is true. Absolutely.
Is there any like continuing ed? I know it's not your field, but I feel like, the financial planners and the people who are working at Fidelity and these big firms, is there training on them now? Are they going through training on crypto
Ye-
and all the benefits or consequences of not reporting it? Like Craig says, I talk to a lot of people, and the people that play around in the crypto space, I don't think I have one client that's like, I paid $87,000 last year in crypto dollars. Like, you never hear it. You hear they have their little card that they hide in their safe, and as long as that's in their safe and it's
Or,
fireproof,
yep.
that's got all their
Or
money in
wallet
it.
on
Yeah.
their phone. Yep. That's keeping track of everything. Oh, I definitely think there's trainings out there, but I think some people don't like change. So it's one of those areas they don't even want to maybe learn about or train about. And I know when I was at that seminar in California, I was looking around at the CPAs or accountants that were in there, and a majority of them were from the West Coast. And it's like, where's the Midwest? Where's the Northeast? It
Yeah,
was
not
interesting
there
to
yet.
see. Yeah.
I always feel like we're about like 6 months behind everything that's happening on the West Coast, from even a real estate market, the way we do business. I have like people I talk to on the West Coast, and I'm like, wow, you guys are like 3 months, 6 months, and then all of a sudden I see it here, and I'm like, okay, well that's coming, guys. Like get
It's-
prepared for it.
Correct.
And I feel like that's kind of helped Milestone in our business, is always kind of evolving and trying to stay up with the changes and the speed. And I feel like crypto is just one of those things where it's going to come out of nowhere, and it's just going to, if you're not even like just abreast to it and you just know a little bit about it, it's going to take you over.
Absolutely. Yeah, I agree. It's coming. Like I said, the guy that called with the gambling, I didn't even know you could gamble with
Yeah,
crypto.
I'm gonna look into that.
So
And then
personal
I
question.
saw the site. I haven't tried it, but I saw the site.
Personal question.
Okay.
Here we go. How much money have you invested in crypto since you came back from the West Coast?
I'll pass.
I'm buying more crypto when I walk out of this. That's all I had to hear.
I have a
Javi, jump on the crypto train, baby.
I have a question not related to crypto.
Yes.
Just one that I get a lot.
Yeah.
Gifting money.
Yes.
So typically it's parents
Mhm.
gifting money to their children
Mhm.
to purchase a house.
Mhm.
Is there and I get this where some people think the amount's 15,000.
Right. It's like a limit.
There's
Yes.
a limit on it.
Yep.
Could you just touch on, is there a limit that people have to worry about, or any tax implications on if you do gift your child, $100,000, $200,000 to buy a house?
Yep. So there is an annual limit that a husband and wife can do together for their children in gift that wouldn't have to be reportable. And then what happens is if you are gifting more, then you have to do a gift tax return, and then it goes out of your gift tax exemption in estate.
which is much higher.
Much higher, correct.
The
So
yearly
it's a
is
tracking.
at the 15
Yeah, it's higher now.
per
Yep.
person.
Yep.
or
And
whatever it
and
is
the
now.
husband and wife can do it together. So you've got like
Double.
double that. Yeah.
And then the lifetime
Is a
in the
lot.
millions.
Yep.
Correct.
And that's why every year, as soon as someone has a gift tax return, every year we're asking that person, did you do another gift? Is it over the number? And then we've got to track it. So there's like a history of it.
Those are problems I don't have.
Not yet.
Yeah, not yet. I mean, I
I
wish I
get that
could write
question a
off.
lot. Some people.
Yeah,
I get a lot.
Of course, they
parents
want to
that are
like
getting
gift
gifts from
that
their parents, but,
first time. I have a client right now. He's gifting a percentage of the house to the daughter, so we've got to report that on the gift tax return
yeah,
for him.
sometimes it's a gift of equity. Sometimes it's just
Exactly.
down payment gift.
Yep.
And, I don't get it all the time, but I get it quite often. My answer is always call your accountant and ask them because I'm not.
We don't know
gonna
what
give you-
goes on.
Yeah, you
Right.
don't know exactly what you've done before and everything.
That's
But that was kind of my understanding too. Was
Yep.
that there was the yearly amount and then the lifetime, which
Exactly.
unless you're
Yep.
Rockefeller, that's probably not happening to most people. But it is good to kind of just get that information out there to everybody.
Mm-hmm. Yeah, absolutely. Because taxes can be scary and sound scary too.
Yeah, it's
Yeah.
so funny how some people are so worried about it. Like the littlest thing, you're like, why are you worried about this? And then other people are like, whatever, they don't care at all about anything. You see so many different sides.
Absolutely.
Almost anal some people are about every decision and dollar that's spent or where it's going, to other people who, yeah, sure, you need this, here you go, and they just move on and they probably never even report it legally to anybody. But
No, it's very true. I'll have some clients that might not want to do something because of the taxes. I'll pull out the calculator, we'll sit there and go through it, and then I'll be like, this is your effective rate, it will cost you. And they'll say, oh, okay. But it helps them make a decision they wouldn't have made because they were so afraid it might be 60% in taxes when it's only 15%.
mm-hmm.
What do you suggest people do when they get a notice from the IRS or the state of Massachusetts or the state that they live in? A notice from like 2 years ago, 3 years ago. Not that this just happened to me like this week, but I might as well hit her. If she's on the podcast, I don't think she can send me a bill for it. So how to make sure you document this. I just got a tax bill for, I think it was
2022. Yep.
2022, like a $5,000 tax bill. I already paid my taxes for all
Yep.
that. I mean, I know what I do. I scan it, I send it over to Stephanie. I'm like, hey, tell me what I need to do with this. But like for our viewers that are watching this, like if you get a tax bill or something from the IRS or the state that they live in, what's the steps that they should do? Because I talked to some people like, I would just throw that away. I'm like, I can't just throw this away. It came from like the IRS. Like I want to find out what it's all about.
Oh, absolutely. So send it to your accountant or tax person. Don't panic because sometimes the IRS or the states make mistakes. And what happened is the IRS, like everybody else, kind of became a mess during COVID. So they were backed up. Their computer systems were backed up. So I would say look at the notice. If you don't understand it, send it to the accountant so they can explain it to you and really review it with them to see if it is correct. If it is not, it is taking us a long time these days to work with the IRS and state. We'll call even lines that we have and we'll get the messages that say, due to call volume, call back tomorrow. I've been working in sometimes same thing, what we're all seeing. I may have to talk to 8 agents to get somebody that kind of knows the question that I'm even asking. So everything's taking a little bit longer, but I would say don't panic. You know what I mean? And a lot of it can be fixed.
Awesome. Well, thank you for coming on Mortgage Daddies.
Of
Miss
course.
Stephanie
I was
John.
happy to be here. Thank you for having me.
We appreciate it.
That's it. See you guys next time.